Chevy just did something no one saw coming. This is the shockwave the car industry wasn't prepared for. With Wall Street stunned by its earnings, Chevy isn't just surviving, it's thriving. While competitors drown in inventory and layoffs, Chevy's bold moves are rewriting the rulebook. But how did they pull it off? And why are other automakers falling so far behind? What exactly did Chevy announce? How did Chevy manage to pull this off? And most importantly, how will this shift impact the vehicles you drive and the prices you pay? Stick around. This story affects everyone more than you expect. What's happening? Imagine this. The car market was in chaos. The competition was fierce, and automakers everywhere were struggling to keep pace. But then, out of nowhere, Chevy made a move that no one saw coming. A move that would shake the entire industry to its core. They didn't just keep up with the challenges, they crushed them. While rivals like Ford and Stellantis were buried under inventory and layoffs, Chevy was rewriting the rulebook. The scene was set, Wall Street stunned, and investors holding their breath. Chevy's earnings were beyond expectations, propelling the company forward while others stumbled. But how did this happen? How did Chevy, once just another player, suddenly leap ahead to dominate the game? The answer lies in a strategy that others missed. While competitors were fixated on high-margin luxury vehicles, Chevy stayed grounded and focused on affordability, without sacrificing quality. Now, as competitors scrambled to keep up, Chevy's story isn't just one of survival, it's one of thriving, of finding new paths in a market on the brink of collapse. This wasn't just a comeback, it was a seismic shift. The car market would never be the same. Cracks in the armor. In just 12 months, Ford and Stellantis saw their market positions crumble. Ford's lots were overflowing with unsold vehicles, and Stellantis had to cut production on key models like the Ram 1500 Classic. Why? Overproduction of luxury vehicles that the market simply didn't want. Consumers were no longer willing to pay sky-high prices, especially with interest rates climbing and budgets tightening. Chevy's competitors failed to recognize the shift. While they were busy focusing on high-end, high-margin vehicles, they underestimated the growing demand for affordable, practical options. As Chevy recognized this, they adapted, and the results speak for themselves. The company's balance between luxury and affordability struck a chord with buyers across all income brackets. The ripple effect? While other companies are struggling with bloated inventories and expensive models no one wants, Chevy's ability to cater to the mass market has given them an edge. It's like watching a once thriving city slowly empty out, while Chevy continues to build new, thriving communities. Chevy's winning strategy. So how did Chevy pull this off? It all comes down to one word: balance. Unlike their competitors who bet everything on luxury models and electric vehicles, Chevy maintained a lineup that catered to the full spectrum of the market. They kept entry-level vehicles like the Trailblazer and Trax affordable, while simultaneously offering premium options like the Silverado and Tahoe for those willing to spend a little more. But the secret didn't end there. Chevy focused on maintaining strong relationships with their dealers, unlike Ford and Stellantis, where dealers were rejecting unsold stock. Chevy's strategy meant vehicles were consistently available, moving off lots faster than their competitors could keep up. And what about the electric vehicle revolution? While others dove headfirst into electrification, Chevy cautiously dipped their toes in, understanding that profitability comes from more than just the latest trend. They didn't abandon gas-powered models, they optimized them, ensuring that vehicles like the Suburban and Silverado continued to thrive even as other automakers fumbled with their EV production. In the end, Chevy's formula worked. They balanced affordability with innovation and stayed agile while others overcommitted to uncertain markets. This made all the difference, positioning them to lead the way while others scrambled to stay relevant. How it impacts the market. Chevy's dominance is reshaping the automotive market in real time. Their success is forcing competitors to reevaluate their strategies, particularly when it comes to pricing and production. Stellantis and Ford can no longer ignore the demand for affordable vehicles, and their failure to adapt could cost them dearly. For consumers, this shift means more choices and potentially better pricing. Chevy's focus on affordability is a win for buyers looking for value in an increasingly expensive market. But it's not just about the cars, it's about the industry itself. Chevy's approach is setting a new standard, and other automakers will need to follow suit or risk being left behind. Chevy's affordable options. In today's automotive landscape, affordability is becoming more critical than ever. With the rise in cost of living, soaring interest rates, and general economic uncertainty, many consumers are looking for more cost-effective options in the car market. And yet, while some automakers focus their efforts on premium high-margin vehicles, Chevy is taking a different route. They're keeping their eyes on the prize, consumers who still need an affordable, reliable vehicle without breaking the bank. Chevrolet has done something few other automakers have dared to do in recent years. They've made affordability a priority. Take the Chevy Trailblazer for instance. This compact SUV is one of the most affordable options in the Chevrolet lineup, with an average starting price hovering around $34,600 when equipped with necessary options. But it's not just about this one model. Chevy's entire lineup is increasingly catering to the more price-conscious buyer. The Chevrolet Trax is another example of a model that offers incredible value for the price, and it's clear that Chevy understands the growing demand for vehicles in this price range. In an era where high-end trucks and luxury SUVs seem to dominate the conversation, Chevy is doing what other automakers have hesitated to do: focus on the mid-range market. They're betting that a significant portion of consumers still want practical, budget-friendly vehicles without sacrificing quality, and it's paying off. Whether you're looking for an entry-level compact or an affordable family SUV, Chevy's pricing is competitive, and their vehicles meet the needs of real-world buyers. This has put them in a position to outperform their competitors in terms of sales, even while some of their rivals overestimate demand for their luxury or high-margin vehicles. While automakers like Ford and Stellantis have moved further upmarket, creating vehicles that many consumers simply can't afford, Chevy has kept its options more grounded. Yes, the Chevrolet Suburban and Tahoe offer luxury and space, but the brand's most affordable models are also seeing impressive sales. In a world where the cost of living is rising, Chevy's decision to continue offering vehicles that sit below $35,000 puts them in a favorable position. This focus on affordability, in addition to their ability to produce vehicles that cover various segments of the market, is allowing Chevrolet to stay ahead of competitors even as the automotive landscape continues to change. EV versus gas success. In recent years, electric vehicles have become the talk of the automotive world. Virtually every major car manufacturer has promised to shift focus toward electrification, with some brands even pledging to phase out internal combustion engine vehicles entirely within the next couple of decades. But while electric vehicles are undoubtedly part of the future, the current reality is that many automakers are facing significant challenges in making them profitable. And when you look at Chevrolet's performance, it's clear that they're taking a more pragmatic approach. Instead of rushing headlong into the electric vehicle revolution, Chevrolet is playing a more measured game. They've learned from the struggles of other automakers, particularly Ford, whose EV models, such as the Ford F-150 Lightning, have yet to achieve the level of success that was initially anticipated. The reality is that electric vehicles are still costly to produce, and while there is a demand for them, it's not enough to justify abandoning the traditional profit-driving internal combustion engine models just yet. Chevrolet's strategy involves a careful balance. While they are still committed to expanding their electric vehicle offerings, such as the Chevrolet Silverado Electric, they aren't putting all their eggs in the EV basket. Instead, they've shifted much of their focus to gas-powered models, ones that remain highly profitable and cater to a broader customer base. Vehicles like the Chevrolet Suburban and Tahoe, while not cheap, have a proven track record of sales success. They offer what consumers want: space, luxury, and performance at a price point that is still considerably more affordable than the higher-end competitors from brands like Jeep and Lincoln. These vehicles, along with other gas-powered models, continue to be the backbone of Chevrolet's success. By continuing to prioritize gas vehicles alongside their electric push, Chevrolet is mitigating the risks that come with investing heavily in electric models that may not yet have a guaranteed return on investment. While the electric vehicle market is certainly growing, the technology isn't quite there yet for everyone. Many consumers are still hesitant to make the switch, particularly given the high upfront cost of EVs. As a result, Chevrolet is maintaining a diverse portfolio that includes both traditional gas-powered vehicles and electric ones, giving them the flexibility to weather any storms in the automotive market. This balance between the old and new is proving to be an effective strategy for the brand as they continue to hold strong against competitors who have overcommitted to EVs. Lessons from the competition. It's clear that Chevy's competitors, particularly Ford and Stellantis, are facing significant difficulties in navigating the changing automotive market. Both brands have poured substantial resources into their electric vehicle programs, but so far the results have been mixed. Ford in particular has seen its electric vehicle offerings struggle to gain traction with consumers. The Ford F-150 Lightning, which was expected to be a groundbreaking model, has yet to achieve the level of success that Ford hoped for, and Stellantis is facing its own set of challenges, as evidenced by its decision to cut production of affordable trucks like the Ram 1500 Classic. What makes Chevy's strategy so effective is that they've avoided falling into the trap of overcommitting to the electric vehicle trend at the expense of their core offerings. Ford and Stellantis have bet heavily on electric vehicles, but they've failed to account for the fact that the demand simply isn't there yet. Yes, the future is electric, but right now, many consumers still prefer the familiarity and reliability of gas-powered vehicles. And Chevy has capitalized on this by focusing on what works. By maintaining production of popular gas-powered vehicles and keeping prices affordable, Chevy has managed to keep pace with the market while others struggle to find their footing. Ford and Stellantis have also made the mistake of overproducing high-end models that appeal to a smaller segment of the market. The luxury vehicles that both brands have focused on come with hefty price tags, and in a time of economic uncertainty, many consumers are turning away from these high-cost options. Chevy, on the other hand, has been more mindful of pricing and has managed to strike a better balance between high-end and affordable vehicles. The Chevrolet Silverado, for example, offers a premium product at a price point that's much lower than its competitors. This focus on affordability, combined with a strong commitment to meeting consumer demand, has allowed Chevrolet to consistently outperform its competitors in terms of sales. While other brands focus on luxury models and EVs that don't yet have widespread appeal, Chevy continues to deliver vehicles that meet the needs of everyday consumers. The result, Chevrolet is becoming one of the most trusted brands in America, with a diverse lineup that appeals to a broad spectrum of buyers. What this means for you. For the consumer, Chevy's approach is a game changer. The brand's focus on affordability is giving people a choice, especially in a market where car prices continue to rise. If you've been looking for an affordable vehicle that doesn't sacrifice quality or reliability, Chevy's vehicles are starting to stand out. And as the market shifts towards more affordable models, Chevy's dominance in this space is only likely to increase. Chevy's decision to keep its pricing reasonable across a variety of models is something that should resonate with buyers who are fed up with the rising costs of new vehicles. While other brands are pushing luxury models that come with inflated price tags, Chevy has found a way to provide value without compromising on the features and quality that customers expect. This makes Chevy an appealing choice for those who want more bang for their buck. Moreover, as Chevy continues to deliver high-quality, affordable vehicles, it sets a new precedent for the automotive industry. If Chevy can continue to execute this strategy effectively, we may see a shift in how automakers approach pricing, production, and consumer demand in the years to come. But for now, it's clear that Chevy is in a league of its own when it comes to delivering what consumers really want. The EV gamble. Chevrolet's approach to electric vehicles is nothing short of a calculated risk. While other automakers are racing headlong into the electric vehicle revolution, pouring billions of dollars into development and production, Chevrolet has chosen to tread more cautiously. On the surface, this might seem like hesitation, but in reality, it's a strategic move that acknowledges the current challenges of the electric vehicle market. Electric vehicles are expensive to produce, with battery technology and infrastructure costs driving up prices. Many automakers, including Ford and Stellantis, have found themselves in a bind. They've invested heavily in electric vehicles, but are struggling to make them profitable. The Ford F-150 Lightning and Stellantis' electric offerings, for example, have yet to deliver the returns expected, leaving these companies grappling with losses. Chevrolet has taken a different route. Instead of going all in on electric vehicles, they've scaled back production to focus on what's profitable now. Vehicles like the Chevrolet Silverado Electric and Equinox Electric are still part of their lineup, but Chevrolet has deliberately slowed down production to avoid overextending themselves. This allows them to manage costs while they refine their approach to electric vehicle manufacturing. This cautious approach also reflects the reality of consumer demand. While interest in electric vehicles is growing, many buyers remain hesitant. Concerns about charging infrastructure, range anxiety, and the high upfront costs of electric vehicles are significant barriers. Chevrolet understands this and has decided to prioritize vehicles that meet current consumer needs, reliable gas-powered models that are accessible and affordable. Dealer dynamics. One of Chevrolet's most significant advantages over its competitors is the strength of its dealer network. While other automakers are facing pushback from dealerships, Chevrolet has managed to maintain strong relationships with its dealers. This is no small feat given the challenges the automotive industry is currently facing. Ford and Stellantis have both encountered significant resistance from their dealer networks. Stellantis in particular has seen dealers rejecting allocations of new vehicles, leaving them with unsold inventory piling up on lots. Ford is not far behind, with dealers turning down deliveries due to oversupply issues. This has created a bottleneck for both companies, hindering their ability to move vehicles and meet sales targets. Chevrolet, on the other hand, has taken a more measured approach to production and distribution. By aligning production with demand, they've avoided the inventory issues plaguing their competitors. Dealers are more willing to accept Chevrolet's vehicles because they know they can sell them. This keeps the supply chain moving smoothly and ensures that dealerships remain profitable. This strong relationship with dealers also gives Chevrolet a strategic advantage. Dealers are the front line of the automotive industry, directly interacting with consumers and influencing their purchasing decisions. By keeping dealers happy and ensuring they have the right inventory, Chevrolet has strengthened its position in the market. This is a stark contrast to competitors like Stellantis, where strained dealer relationships are creating significant challenges. Challenges in the luxury segment. While Chevrolet's strategy has largely focused on affordability and mid-range options, they haven't ignored the luxury segment entirely. Models like the Chevrolet Suburban and Silverado High Country cater to buyers looking for premium features and top-tier performance. These vehicles are critical for Chevrolet's profitability, as they come with higher price tags and larger profit margins. The Chevrolet Suburban, for instance, remains one of the most iconic and sought-after full-size SUVs on the market. With its spacious interior, advanced technology, and rugged performance, it appeals to families, outdoor enthusiasts, and luxury buyers alike. Similarly, the Silverado High Country offers a premium truck experience, combining durability with high-end features that rival even the most luxurious offerings from competitors. However, competing in the luxury segment is not without its challenges. Automakers like Jeep and Lincoln have set the bar high with models like the Grand Wagoneer and the Navigator. These vehicles offer a level of luxury that is difficult to match, but they also come with steep price tags, often exceeding $100,000. While Chevrolet's premium models are more affordable in comparison, they must strike the right balance between offering luxury features and maintaining competitive pricing. This is where Chevrolet's strategy becomes particularly nuanced. By offering vehicles that provide a luxury experience without the exorbitant price tag, they've carved out a niche for themselves. The Chevrolet Suburban and Silverado High Country might not have all the bells and whistles of their higher-priced counterparts, but they deliver what matters most to consumers: reliability, performance, and value. Still, the luxury segment is a battleground. As competitors continue to push the envelope with cutting-edge features and opulent designs, Chevrolet must stay innovative to remain competitive. Their ability to deliver a luxury experience at a lower cost is a significant advantage, but it's a challenge they must consistently rise to meet. Market perception. Public perception plays a crucial role in shaping an automaker's success, and Chevrolet has done an excellent job of positioning itself as a brand that listens to its customers. In a market where many automakers seem disconnected from what consumers want, Chevrolet's focus on affordability, practicality, and reliability resonates strongly. One of Chevrolet's key strengths is its ability to adapt to changing market conditions without losing sight of its core values. They understand that not every buyer is looking for a luxury vehicle or the latest electric model. Many consumers simply want a dependable car or truck that fits their budget, and Chevrolet has made it clear that they're committed to meeting that need. This consumer-first approach has helped Chevrolet build a strong reputation as a brand that prioritizes value over flash. While other automakers focus on high-margin models and niche markets, Chevrolet is doubling down on what has always worked, producing vehicles that appeal to a broad audience. This has allowed them to maintain a loyal customer base while also attracting new buyers who are frustrated by the rising costs of vehicles from other brands. However, Chevrolet's market perception isn't without its challenges. The automotive industry is becoming increasingly polarized, with some consumers gravitating toward luxury models and others embracing electric vehicles. Chevrolet must navigate this divide carefully, ensuring they don't alienate one group while appealing to the other. It's a delicate balancing act, but one that Chevrolet seems well equipped to handle. As they continue to refine their strategy and adapt to market trends, Chevrolet has the opportunity to further solidify its reputation as a brand that delivers on its promises. By staying true to their commitment to affordability and reliability, they're setting themselves apart in an industry that often prioritizes profit over people, sustainability, and profitability. Chevrolet stands at a critical crossroads, balancing its commitment to profitability with the growing demand for sustainability. As the automotive industry pushes forward into a future dominated by electric vehicles, Chevrolet's approach has been both cautious and calculated. While they've made significant strides in developing electric models like the Chevrolet Silverado Electric and Equinox Electric, they've also been pragmatic about the financial realities of electric vehicle production. Unlike some competitors who have gone all in on electric vehicles, Chevrolet recognizes the challenges of making these models profitable. Battery technology remains expensive, and infrastructure limitations such as insufficient charging networks continue to hinder widespread adoption. Chevrolet's strategy of pulling back on electric vehicle production, focusing instead on optimizing their internal combustion engine lineup, has been a bold but necessary move. This approach has allowed Chevrolet to keep its financial foundation strong. High-margin vehicles like the Suburban and Silverado continue to generate significant revenue, which in turn funds research and development for future technologies. It's a model that ensures they can invest in innovation without jeopardizing their current profitability. However, this strategy also comes with risks. By taking a more measured approach to electric vehicle adoption, Chevrolet risks being perceived as lagging behind in the race towards sustainability. Tesla's dominance in the electric vehicle market and the aggressive strategies of other automakers may challenge Chevrolet's position in the years to come. If they fail to scale up their electric vehicle production at the right time, they could lose valuable market share. To mitigate these risks, Chevrolet is focusing on incremental improvements rather than sweeping overhauls. Their emphasis on hybrid models and fuel efficiency in traditional vehicles demonstrates a willingness to evolve while keeping consumer affordability at the forefront. This balance is critical in ensuring Chevrolet remains competitive in a market that values both innovation and practicality. The domino effect. Chevrolet's recent success has sent shockwaves through the automotive industry, forcing competitors to reevaluate their strategies. By focusing on affordability and maintaining a diverse lineup, Chevrolet has challenged the conventional wisdom that high-margin luxury vehicles are the key to profitability. This shift has created a domino effect, prompting other automakers to reconsider their approach to pricing, production, and consumer engagement. For competitors like Ford and Stellantis, the pressure is mounting. Stellantis' decision to cut production of affordable models like the Ram 1500 Classic and Ford's struggles with overstocked dealerships have highlighted the consequences of misaligned strategies. Chevrolet's ability to align production with demand and deliver vehicles that consumers actually want has set a new standard in the industry. This ripple effect isn't just limited to automakers. Dealerships too are feeling the impact of Chevrolet's approach. By maintaining strong relationships with its dealer network and ensuring that inventory meets market needs, Chevrolet has created a model that other brands are now scrambling to replicate. For dealers, having the right mix of vehicles on the lot is crucial, and Chevrolet's ability to deliver this consistency has made them a preferred partner in the industry. But the domino effect goes beyond dealerships and automakers. Consumers themselves are benefiting from the shift sparked by Chevrolet's strategy. As competitors work to catch up, the increased focus on affordability could lead to more options and better pricing across the board. For buyers, this means a market that is more aligned with their needs and less focused on pushing high-priced luxury models. Looking ahead, Chevrolet's ability to sustain this momentum will depend on how well they navigate the evolving demands of the automotive market. Their focus on balancing affordability, innovation, and profitability has positioned them as a leader, but staying ahead will require continuous adaptation. The automotive landscape is changing rapidly, and Chevrolet's ability to anticipate and respond to these changes will determine whether they remain a dominant force or risk being overtaken. In the end, Chevrolet's success serves as a reminder that understanding and prioritizing consumer needs can reshape an entire industry. By staying true to their values and delivering vehicles that balance quality, price, and innovation, Chevrolet has set a new benchmark for what it means to thrive in a competitive market. But what do you think? Let us know your thoughts in the comment below.